Good afternoon, ladies and gentlemen. My name is Marcin Lauer. I represent the Investor Relations Office of TAURON Polska Energia. I have a pleasure to welcome you during the meeting of the Management Board with fund managers and analysts in relation to the publishing of the earnings report for Q1 2015. I'd like to welcome also investors and analysts that are watching the web internet broadcast of our conference. As I mentioned, our meeting is being broadcast over the internet, and it's also possible to listen into it via conference call mode by dialing in to a number that we distributed to you before the meeting. Today's presentation, as usual, will be conducted by Mr. Dariusz Lubera, the CEO, and Mr. Krzysztof Zawadzki, the CFO of our company. Mr. President, please take the floor. Good afternoon, ladies and gentlemen. Good afternoon, ladies and gentlemen. Let me first, just to kind of be ahead of your questions, I'd like to give you a brief information. I'll hand over the floor to Mr. Zawadzki about the slight change to the way we present our earnings, because the questions may arise, so let's sort of answer them right away. So, Krzysztof, please. Yes, ladies and gentlemen, we changed the provisions on the policy of accounting on the way we present individual segments. What the change is all about? The change is such that in the current generation segment presented on slides, it includes three previously listed segments: generation, old generation, let's call them, mainly hard coal-fired generation. It also includes the heat segment and the so-called renewable energy sources RES segment. Why we have made this change? Certain problems were arising in interpreting and assessing the results of each segment, quite often voiced by you, and applicable among others to the green electricity generation. That's true, but this is seen in three segments. In generation, through the production using the biomass dedicated firing and co-firing sources. In heat segment, do the same thing. And then the renewables segment, wind-based generation and hydroelectric power plants. Similar situation was related to the heat. We had heat in the generation segment through cogeneration, and in TAURON heat through the cogeneration production and heating dedicated plants as well. These were segments that did not meet the significance level. Of course, once we decided to present them differently in order to show the entire value chain. Also, some of the market participants were saying that because of that, those segments were not comparable to other utilities that are showing those segments collectively, jointly. So therefore, it seems as of today, it seems like a more transparent breakdown. Of course, we will be showing, not in this presentation yet, we will improve it with a view to the information that was presently shown to you related to the previously, let's call them old segments. That's why we have a full picture without the management reporting. We have a full picture of, in our internal materials, those segments are shown differently. However, this is just a change applicable to the way we present the earnings and the segments presented in the financial statements. If today there are questions related to the segments that are not being listed today, shown today, I will try to answer them. We will come up with a model of presentation in the future that would, I hope, satisfy everyone. Nevertheless, segments themselves today are being presented in the way you can see on the slide. Of course, just to add to that, if you need some detailed information according to the old breakdown, we always provided them to you. Therefore, let's move on to the presentation. And first of all, the key financial parameters for the first quarter of this year: sales revenue, 4,754 million PLN, 2.7% down versus last year. EBITDA more than 1 billion, 6.2% year-over-year down. Net profit one-off, but 26% growth rate. As we mentioned, growing capex here, the growth rate versus previous year is 40%. And net debt to EBITDA ratio up 0.06. As you can see, all segments contribute to the EBITDA, and EBIT except for mining. We will explain it why later. Brief look at the highlights that occurred in Q1 or close to Q1. There were some internal events that took place related to the group itself. Namely, in January, we expressed our initial interest in the purchase of all or a part of, let me emphasize, or a part of Brzeszcze coal mine assets, because if a project is completed, it'll probably be a part of the assets. On March 12, ladies and gentlemen, we introduced, floated on the catalyst market 1.75 billion worth of TAURON bonds, and this was one of the larger issues on the catalyst market. April 15, the TAURON Group joined the PGE EJ1 special purpose vehicle set up to carry out the nuclear power plant project together with KGHM and NR. April 23rd, the ordinary general meeting of shareholders took place, which in accordance with our recommendation passed the resolution on the dividend per share 0.15 PLN, 262.9 in total. Dividend date July 22nd, payment August 12. Market-wise, two important highlights. January 1st, change of payment mechanism for the operational reserve payment. And of course, it's difficult not to mention the new renewable energy sources law coming into force. First of all, the introduction of the auction system and the feed-in tariffs for prosumers, as well as the reduction of support for biomass co-firing system, practically eliminating biomass co-firing, and for hydroelectric power plants with capacity of more than 5 megawatts. Briefly, a brief look at the macroeconomic and market situation. So one should have a positive view of both the growing GDP growth rate and the PMI index for the manufacturing industry. And in Q1, ladies and gentlemen, we observed the increase of electricity consumption, 1.3%, electricity consumption growth, and at the same time 2.7% growth of electricity generation. So there was a surplus that was exported, and the export of Q1 was 0.6 terawatt hours. It's interesting because last year Poland was an importer, net importer of electricity. Looking at the prices for the coming year and next few years, looking at the slide, you can see them, but I can just mention that it seemed that the price 2015 will go above 180 PLN. Now you can see, based on what you see in Q1, that the average price will not be above 180 PLN. Looking at the structure of electricity generation in Poland, as I mentioned, 2.7% increase of electricity generation, so 42 terawatt hours generated in Q1. Hard coal-fired generation, you can see a decline about 2.3%, whereas TAURON generation itself, our subsidiary, posted a 5.6% growth in Q1. As you can see further on, a strong growth in the renewables generation, mainly wind-based generation. Let's move on to the key operating data for Q1. Let me hand over the floor to Mr. Zawadzki, the CFO. Ladies and gentlemen, starting with hard coal production. The hard coal production in our group declined 22.4%. The main reason for the drop were three reasons. First of all, the delays in the armaments of coal faces, mainly at our Janina coal mine. A worsening of a geological condition, therefore work progress was slowed down, and the third element, the lower quality of coal, more pollutants, more contamination in the coal. Therefore, in the Q1 we had a lot of stone in the coal that we extracted. Despite the drop in the production, we had a more than 15% of intra-group sales. This is due to the increased production year-over-year from our hard coal-fired generation, almost 7% growth of sales outside of the group. Of course, we have a lower production and a higher sales. Therefore, this coal was used for sale from our inventory. The inventory level end of Q1 versus end of 2014 went down by 182,000 tons, and that means that the cost on the balance sheet that was listed before was included in the profit and loss statement this year. This is about 35.5 million tons that were included from the balance sheet into the P&L statement for Q1. This cost gives you about 193 PLN per ton. Looking at it in heat generation, we have a decline in nominal terms, 12.7% heat quarter versus last year, but last year we had EC Nova, but that was now transferred, spun off to Tamek, which is a joint undertaking, joint venture of Metal. In Q1, the sales from EC Nova is not included, so therefore, if we look at the comparable data and subtract it from last year's Q1, about 1 petajoule, then the growth rate year-over-year would be 1.3%. Looking at heat generation, the weather conditions in Q1 were better, so the temperature was lower, the average temperature was lower than last year. The number of heating days were the same, so we cannot speak about the drop due to the external weather conditions. Electricity generation, hard coal-fired, higher, 5.6% up, as mentioned by the CEO. Last year we had quite a low base. As you know, we had the operational capacity reserve. The units were contracted at a lower level, therefore we had a growth year-over-year and almost 13% up generation from our renewables. Distribution of electricity, a slight increase, 2% of the electricity volume distributed. The number of new customers connected went up by 29,000 connection points. Electricity supply, retail, nominal terms, 11% decline. I'm saying in nominal terms because you also, let me explain. For the first time in a number of years we had we managed to slow down of pace of drop of volume. I mean here both wholesale and retail sales. The amendment is due to the reclassification of two customers, moving them from the retail sales to wholesale and from wholesale to retail shifts. In the volume that we are showing for Q1 2014, we have a customer that is currently classified among the wholesale customers. This is almost 0.6 terawatt-hours, whereas the volume that we are showing in 2015, we have a customer that's been reclassified, that used to be at wholesale, now it's retail. And therefore, if I amended the volumes, the actual comparable volume Q1 2014 would be about 9.2 terawatt-hours. That means a drop, but 1.7 decline. But if you add it to this retail volume done by the holding company, carried out by the holding company, we have, as a matter of fact, a slight hundreds of percent growth year-over-year. That's, I wanted to emphasize the stopping of declining volumes in our group, what we observed in the previous years. Looking at the sales revenue, 2.7% decline year-over-year in nominal terms. The decline mainly due to the electricity sales, among 8% increase in the distribution services, and that's not me, increase in terms of hard coal sales. Net profit, very strong growth, more than 100 million, and please do not multiply this net profit times 4, because end of the year that would mean the profit we would achieve the level that we had never achieved. I would wish we did that, but we had some one-off events in Q1 that definitely increased the net profit. One of them is the refund of overpayment for tax reasons for 2013, tax refund. The next component is the financial revenue and FX differences, 46 million PLN in total. Also, the net profit is increased by the share in the joint ventures. I mean here the joint venture that we do with Metal, that's 21 million PLN. These are the main components. There are also reasons due to the deferred tax that led to quite a strong growth of net profit in Q1. EBITDA, in nominal terms, 0.6% down. Also, if we looked at the comparable data, eliminating one-off events, in 2014 EBITDA that was spun off along with assets spun off into 45 million into the joint venture, and in Q1 the cost of redemptions that didn't occur in 2014. Then it would mean that in nominal terms we have a 2.9% growth of increase of EBITDA year over year. Structure of EBITDA similar in previous periods. The main part of contribution to EBITDA comes from distribution, 3% increase versus last year in the structure. In case of supply, there's a decline by 3%. Quite a strong growth in the generation segment. Of course, this is the segment that includes the previously mentioned separately listed segments. If I were to look at the comparable old segments separately, then the difference in EBITDA year over year is quite strong. In case of the generation segment, this is about 75 million plus. Looking at the old, so-called old generation, decline 2.5 million PLN. If we talk about the former renewables segment, about 48 million decline in case of the former heat segment. This is the drop due to the shifting of those assets to the joint venture that we are doing with Metal. EBITDA bridge Q1. I mentioned the decline. In this case, the margin, highest margin on the distribution. We're not showing renewable segment anymore. We have a decline on the operating profit and the depreciation in the EBITDA structure. We have declines. Looking at its individual segments, which made a contribution negative or positive. The negative contribution came from mining, mainly due to the higher own cost of hard coal sold. This unit cost of hard coal sold went up by about 50 PLN per ton. Lower prices. Looking at the prices Q1 2014 and the current Q1 2015, we have about 0.60 decline per gigajoule, about 6 PLN per ton. However, if we looked only at the outside of the group sales, the decline would be much higher, because on the non-thermal coal, the decline was about 40 PLN per ton. If we look at the distribution, mainly grid losses and distribution services, in the cost items, in these cost items we had an increase. In case of generation that has better earnings, better results, two main reasons, maybe three. Margin on trading, about 60 million PLN. That's what we got in Q1 2015. Last year it was much less. In that case, the component that gave quite a strong growth came from the operational capacity reserve. It was about 79 million PLN in revenue. This year we have 20 million from the operational capacity reserve, so definitely less. So this we recovered that in the trading, and the electricity sales price, average price, a bit higher price. In terms of looking at the supply segment, which has a better results versus last year, mainly the cost of redemption and the average cost, sales cost. But the average, I'm saying about it because in some tariffs there was an increase and there was a drop in some others. The structure is such that the average sales price is a bit lower year over year. Prime cost by type, one may say that the OPEX cost is at the same level, slight reduction, 0.5%. This cost decline mainly due to the employee benefit cost, consumption of materials and energy and fuels, and in the depreciation. External services went up a little bit, and the tax, mainly due to the CO2 cost in TAURON heat, not in generation, because we had a surplus there, and the tax on grid assets. These were the two components that had contributed to the increase in the structure of costs. Debt and financing, the slide that hasn't changed significantly since our last presentation, our last earnings report. 0.06, the net debt to EBITDA ratio went up, 1.91 now. As far as financial debt itself, there's a decline versus end of last year by 207 million PLN. The available financing is exactly the same amount. This portfolio hasn't changed as of today. If you look at the forthcoming, I'm talking about 2015, mainly 2016, the maturity payment, maturity deadline, maturity date, you can see that 2016 we have to pay buyout bonds that we took to purchase Vattenfall. You can see the time flies. As of today, we are arranging long-term financing. It's possible to acquire from commercial banks financing with a much longer maturity period than in previous years. We assume that this year we will commence the procedure of financing based on a 15-year maturity period, but will protect us in 2015 and will flatten out the payback time deadlines of debt. We don't see any risk. We see no threat here. We can see that the financial execution that we have today is quite safe today, and we are in a safe place. Now let me hand over to the CEO. Now, ladies and gentlemen, briefly about the main CapEx projects, work progress that are underway. Of course, Jaworzno power plant, the works commence at the construction site, and the work progress we estimate to be about 10%. The general contractor is at the construction site. The earthworks have commenced, and the works are going full steam. Successive stages will be done this year. Completion date hasn't changed, 2019. Close to completion is the CCGT unit at Stalowa Wola, CHP, the work progress above 76%. And this year we should, talking about the cogeneration unit in Tychy, also about 60% work progress next year completion date. We are completing the upgrading CapEx on the 200 megawatt units, both in Łaziska and Jaworzno power plants, related to the completion of installing the flue gas denitrification systems, namely to make them compliant with the new NOx emission standards. Łaziska will be completed this year and Jaworzno next year. And we are commencing the project to build the CCGT unit at Łagisza power plant, a twin project versus Stalowa Wola, 413 megawatt electric capacity, 236 thermal capacity. We want to complete this unit in 2018. And also, there are two projects underway, CapEx projects in our mining, namely the construction of the 800-meter level at Janina coal mine and the construction of Grzegorz shaft at Sobieski coal mine. And the project progress there is about 20%. Talking about CapEx amounts, then you can see we accelerated here versus last year, 40% up, reaching 792 million PLN. You can see here much stronger, greater investment in generation, 423 million in Q1, and the distribution share similar as previously. Here the distribution in Q1 CapEx was a bit lower, but there is no threat for the completion of budget. So 100 million less doesn't mean that we will be reducing CapEx in distribution segment. In distribution, we spend this 94 million on the construction of new connections, 169 million on upgrades and restoration of grid assets. And briefly about the efficiency improvement program, slide number 12, for 2013-2015 time frame, 864 million was the total amount that we budgeted. It's practically accomplished, 97%. We already realized the savings, and we continue implementing this plan. Includes voluntary redundancy programs. 1,428 persons joined this program. Altogether since 2010, it's almost 4,000 persons in total, 3,992 persons to be precise, that enrolled at the voluntary redundancy program. And the contribution of voluntary redundancy program at the end of the program will be about 73% of savings will come from that, and the other initiative 27% of the total savings. Of course, preparations are underway, working on another efficient improvement program for the next time frame. So much from us. Thank you very much, and we are ready to answer any questions you may have. So let's move on to the Q&A session. Okay. Let's have questions from persons present here, as well as the persons that follow our broadcast over the internet. You can send, let me remind you, the questions can be sent using the form that's provided on the website where the web broadcast is being provided. Please. Mr. Krukowski. Thank you. Tomasz Krukowski, Deutsche Bank. I have several questions. Let me start with the more detailed ones. In Q1, the generation earned 60 million PLN margin on trading. Could you tell us a bit more, how does this work? I understand that you purchased electricity on the market instead of generating. That's true? Correctly, exactly. So what volumes, if we can talk about that, and what would happen if you had been forced to generate this? What profit you would have on generation versus what you earned on trading? Well, in terms of trading, I will have to look at the detailed data. It works the way you described. If we contracted the price mainly related to the intra-group sales, so in our supply segment, then if the cost of electricity on the market is below the variable cost that we purchase electricity on the market, that's the way it works. Average unit variable cost is about 140 plus PLN per megawatt hour. The average contracting is at the 170 PLN, so we are somewhere in that range. If the situation comes up that there is no electricity, if it would not be possible to acquire on the market, then we would generate. Of course, the margin on the sales would be much lower. We wouldn't have 60 million on during Q1. In terms of volume, if you allow, I will give you an answer, but I would have to look at the detailed data. How much we really realized on trading, and I have the data. So if you had generated, you would generated the 140 plus variable unit cost, depending upon specific unit where the production is done. But roughly, this is the clean dark spread is about 30 plus PLN on average on the contracted electricity. I understand, thank you. One more question, more general one. Could we hear some update on the sale of wind farms? I saw some headlines that the situation has changed on the market and this is a problem, or the buyer is more demanding in terms of price. Can we get some details on that? Well, the fact that the situation has changed quite dramatically over the last few weeks, that's quite obvious, I would say. That, of course, leads to the situation where the economics of this process, of this deal, looks a little bit different than it did at the time when we started talking about this project itself. And mainly the economics change is related to the price of certificates. As you know, the price of certificates over the last few weeks have declined several dozen PLN, from 170, 180 down to 126. At the time, it may even cost 119 PLN, 119. I think it's no secret this type of a deal is based on the certificate and electricity purchase agreements that guarantee a certain rate of return for the investor. If under this deal, if I undertake to purchase electricity at this price, so the situation where the market price of the same product is much lower, then I would have to pay the difference between the electricity price and the so-called floor set in the transaction. Therefore, from this point of view, it seems that the closing of this deal is a bit more difficult. We are talking to the investor on changing the financial parameters on a different structure. I assume it should be completed as soon as possible, but that's the whole story. So the base scenario is that the transaction is still there, or there is a significant risk that the transaction will not go ahead. In our plans, it was never included, with deal, as with a high certainty. Neither in our internal forecast, we didn't forecast any upside on this. The main driver for us was not really the ratio, but the refinancing and getting more debt to spend on more wind farms. That was the main driver. As of today, it's a bit out of date, as a matter of fact, because at the time when we started talking about the project, we had on the table several projects that were quite interesting. During our talks, it turned out that both the closing of the deal and the refinancing and the time frame, the schedule, would not allow us to spend these funds on new farms, on new wind farms. Also, there was a risk due to the completion of the construction of those wind farms under the old regime by the end of 2015. And this argument, talking about this spending of those funds on those farms, we put it off. Market focus on the second. On the other aspect, the reduction of the net debt to EBITDA ratio, which, as I say, was not really the decisive factor in the context of this project. I'm not afraid if it turned out that this project is not done. I'm not afraid of that scenario, because the alternative for that is just simply talking to the financiers to increase the margin when the net debt to EBITDA ratio is exceeded. 3 months ago, it seemed it's a done deal. Now, I shouldn't have this impression that it's a done deal. Well, until the ball is in play, as one well-known coach said, I wouldn't say that the deal is not done. There could be a breakthrough. Definitely, we will inform you about the status of this deal if there is something to be reported. Thank you very much. Mr. Piotr Dzięciołowski, infallible. Thank you very much. I'd like to ask, why do you want to buy PKP Energetyka? That's what the press says. And in what form you want to buy it? Because it seemed to me that your balance sheet is a bit tight, and now you want to burn it with more balance sheet. I don't know where this information came from. We never said publicly about this deal. That's why I'm asking, could you publicly say something? No, we cannot. I'd like to ask about the structure, whether the new structure of reporting. Will you be running your business according to the old structure, only to us, the analysts, you will be providing less data, or you have changed the way you look at the business, and, for instance, you will get rid of some subsidiaries, close them by merging them, and generate cost savings? What's the main driver for changing the way you show data to the capital market? As a matter of fact, I'm a bit disappointed. One of the arguments after the presentation, one of the CEO mentioned that was the way you perceive it. The discussions with the segments are not very clear or transparent. That's one of the arguments to adopt this new policy, and maybe I'll be hit on my head. Maybe the response is quite different. There is no any hidden truth. The business we run the same we do. It's just the way you present the data is different. It seems to us it's more transparent and simple. If the situation is that you, as a result of your common conversations, you determine that you're missing some information, but I think showing information as before doesn't make sense, because those presentations were not very transparent, were not very clear. The bridges, that the structure was showing those small, minor segments, was not simply not transparent. If there is a will to add to this earnings presentation, because in the reports and statements those segments are grouped, then we can do that. But definitely there is no hidden truth the way we run the business. Nothing has changed here. What has changed in terms of other subsidiaries, but including the other segment, TAURON Customer Service, which is a subsidiary that provides all the services for the group, was included in that other segment. There is no significant difference there. No material changes there. I don't think it's an issue that should make us come back to revert to the old approach. Let me assure you that we were to bring about the closing, liquidation, or mergers of subsidiaries. Definitely, it would not be. You wouldn't be finding that out in this form, in the way we present our earnings. Okay, let's leave that behind for now, the presentation. I'd like to ask, what's your understanding of your variable cost? Why are you calculating it to be 140 or 180? What is the variable cost of extracting coal in your coal mine? And why physically it's not possible to increase the volume? Do you conduct the drawn calculation on accrual basis through all the divisions based on the variable cost of the coal mine? Or whether this closing of a margin of a clean dark spread which took place in Q1, that makes sense, because of that we are not increasing the mining volumes. That's the only way to have the mining earn any money. Of course, we are running the reviews, analysis through all the divisions, and the unit variable cost is analyzed based on the transactions that were closed and the volume that we contract from our subsidiary. The variable cost that's provided to the risk analysis office that sets a certain portfolio and the cost that can be comparable to the benchmarks, market benchmarks, but in case of mining, it's not so much cost that's important, because our mining company is competitive versus other coal suppliers on the market. Of course, the situation may have changed over the last few months or quarters, where there was some coal available in the market that's not at the cost level of 7 PLN per gigajoule from Kompania Węglowa. That's due to the current situation, the higher inventory levels. Of course, the thermal coal offering came to the market from Katowicki Holding Węglowy, but that's an offering that should be treated as a base volume for our production, our generation. And besides, it came when we contracted already the coal volumes for the entire 2015. So, from a cost point of view, of course, we are analyzing that, looking at the structure of a unit mining cost. It's 8%. It's not a big issue, 8% of the total cost. The main element is the volume and the extraction volume and the fixed costs. That's why I'm asking, why are you reducing output? Well, no, we are not reducing the output. Of course, we, as a matter of fact, concerned about the fact that the production declined in our coal mine, not due to reasons that we decided to do that, but there were factors to a large degree independent, if we talk about beyond our control, and the fact things that are within our control, improvement of organization work we're working on it, but mainly it's factors that are beyond our control. Last question from me. I'd like to ask, because you mentioned, Mr. Zawadzki, you mentioned that there is a reason that this net debt to EBITDA ratio could be surpassed, and this was involved increasing the margin. Could you expand on that, since we opened the subject, whether this net debt to EBITDA ratio can be exceeded, when, by what, by how much the debt would go up? What is the bank's opinion on that? What collaterals they would require? What negotiations would bring? I think spreading any panic, or not really a panic, but saying about topping the net debt to EBITDA ratio, you know very well that we have one financial covenant related to the net debt to EBITDA ratio at the level of 3. What is happening today on the market in the context of electricity prices and coal prices, of course, has an impact upon the net debt to EBITDA ratio. We are doing our best, but on the cost side, we want to adjust to the revenue side that dropped. That's true that the EBITDA forecast that we have for 2016 is a bit lower than even a year ago, and that's the reason for that there is a risk that we'll get close to the net debt to EBITDA ratio 3. It may happen that we might go above 0.1, 0.2 above the 3 level. So far, we have not conducted any official talks to the banks about the possible costs of exceeding the net debt to EBITDA ratio of 3 or increasing of a margin 4 in going above this 3 level. We are talking about the possibility of adjusting the covenant for new financing at the level of 3.5. About the outcome of those talks, I would still wait, Mr. Piotr. Frankly speaking, there is a risk of a slight exceeding of the net debt to EBITDA ratio. We are doing our best not to exceed that net debt to EBITDA ratio, and I give you a sure. And definitely this year it will not happen. This year there is no risk of us going above the 3 level. We have a number of questions from our analysts, investors that are following the broadcast over the internet. So let's start with the question coming from Richard Wadjet from Allianz. What impact on this year's EBIT result will have a spinning off of the deconsolidation of TAMEH, so the transfer of Nova CHP, and what benefits we could expect as a shareholder of that new entity? being TAMEH. Based on Q1, because it's difficult to say what will be the performance of the entire joint venture, I can say that the share in profit in the joint venture is a bit higher than what we assumed, what we budgeted. Is due to the higher production, not of our assets, but of Ostrava, which is also part of a joint venture. What came out of EBITDA is at the level of 42, if I remember correctly, million PLN, whereas the contribution to the profit in the joint venture is about 45, sorry, but that's Blachownia, because 42 is applicable only to Innova. There's also Blachownia. So 42 is from Nova, and the share was 21. So as a balance, we have about 20 million less year over year on the end result. When you multiply, it's about EBITDA that we roughly expected to have less, about 70 million PLN net due to EC Nova. Thank you. Let's move on to the question of another investor, Mr. Vetter, CF Partners. Please explain what cost of CO2 certificates in Q1, what cost was incurred in Q1, and what cost do we envisage for the entire 2015? If I remember correctly, the average cost of purchasing certificate in Q1 was around 150 PLN. Let me verify that, to be more precise. Yes, 158 PLN. That was Q1 this year. What will be at the end of the year? The majority of certificates we have already secured, that's true. I assume that the average could fluctuate between 160, 150 plus. Above that a little, but not according to the original budget. 170 plus was the original budget for certificates. I assume it's going to be below, actual performance is going to be below that budgeted level. Thank you. More questions from the audience. Please. A question about this savings plan program. It seems like it's been completed. The goal has been accomplished. The 57%, it says on the slide, it comes from the restructuring of the workforce. It's supposed to be 73 from the very beginning. In the other part, it's more than 70%. The second time frame is 50 plus, but starting from calculating the first program, first time frame. So what could be the versus the second savings program? Taking into account the structure or value. Let me put it this way. I know what you mean, I think, here. Taking into account the structure of those programs, the biggest impact from the workforce restructuring was highest in the first time frame, the second was lower, and the third one will be lowest. So the average, looking at the 73%, will be less than that. We had to focus more and more on the initiatives that are not related to the liquidation of jobs, layoffs, because there's fewer and fewer persons now joining, new persons joining the voluntary redundancy scheme. Let me emphasize, we didn't implement any layoffs, any restructuring. Everything was under voluntary schemes, and we are exhausting those programs. I think it seems like there's fewer persons willing to join it, and also on the employer's side, because there were refusals as well. So looking at the restructuring of workforce, its contribution will be lower. Talking about the amount, I will not dare to say now. After the first half of this year earnings report, I will maybe say a bit more. We're working on this program. Looking at the current program, planned savings were 780 plus million. We know it's going to be more, definitely. We think actual performance will be 1.1 billion, but I do not assume that the third time frame program will exceed this level. I'm referring to the voluntary redundancy scheme. It's the only measure of repetitiveness and recurrence. Okay, that's correct. That's true. Let's leave it behind. I have a question to the segment that now combines other and customer service. 40 million EBITDA from that. In Q4 it was -5. What happened there? And this segment is not mentioned in this presentation. So starting from now on, 40 million will be going there every quarter, or was there some one-off event? We are talking about a segment, other segment, yes? Correct? Segment, other. 40, I didn't get that 40. Could you maybe... I looked at year over year, but the other and unassigned items as a total, that's how I looked. Unassigned items are not applicable to any segment. These are the items that are outside of the subsidiaries that are included in the other segment. These are items. Okay, let's leave it behind. Let's come back to 43 million EBITDA in a other segment. In Q1 last year it was. No, in Q1 this year. These are other and customer service. I'm wondering why this EBITDA is so high. Well, it's a detailed question. I would have to look at the materials because some new subsidiaries were put into this other segment. How did it split between the customer service, which must generate the majority, substantial majority of this EBITDA, and the other subsidiaries? I can't tell you now. I will have to review. It's not really material, I would say, in my opinion, but I undertake to give you an answer. I can't give you off the top of my head. I would have to look into the material analytical materials. And the last question. In the supply segment, outside the trading on certificates, can you see some operational improvement of the margin? Because looking at slide number 19 and 18, year over year you reduced the supply, mainly in the A tariff. So I'm wondering whether you're running some policy of terminating unprofitable contracts, or on operational level, some customers agree to higher margins on your side, or apart from trading, do you see some positives there? Well, the biggest upside that we saw in the supply segment was mainly to the redemption cost. We do not conduct some policy that would mean that we are fighting for volumes at low margins. I think margins, as of today, you know, those margins have not improved, as a matter of fact. Margins per segment look such way that the group is about 4%, Group A 4%, Group B 3%, the biggest margin generating Group C1 is about 24%. The average margin on supply is about 11.7%. That was the previous period. That's what I know. The margins on those groups did not improve quarter over quarter. As a matter of fact, margins have declined slightly quarter over quarter. If you're asking about some detailed actions, I cannot think of anything in that subsidiary except for that very detailed margin policy in terms of concluding new contracts. Okay, thank you very much. Thank you. I suggest another question from the internet. Fred Barazzi from Goldman Sachs. Two issues. He'd like to hear the opinion of the management board on the two issues. What was the reason for the recent declining electricity prices for 2016-2017? Due to that, does the policy plan to change its hedging policy? And what average electricity price does the company expect for 2016? And the second topic, the second issue, is related to the changes in terms of remuneration on the renewable energy sources, or the changes of a recently passed law. Does it have any impact upon the plans in terms of sales of renewable energy sources? In terms of the price, we are roughly within our forecast. If you could show me, if you could show on the slide those average prices that are shown on slide number 4. The average price for 2015 will not be above 170. Once the price 171 listed here in this presentation, was applicable to the contract signed in 2014. 2016, we are very close to what is shown on the base contracts, 1 year contract, but 176, 177, there are no major deviations. So what was the reason for the decline? If I were to say, I think quite a big drop, definitely versus last year, came from the operational capacity reserve mechanism, which this year did not work, as a matter of fact. Everyone, all the players that previously on the balancing market, they were increasing the price due to the fee for the operational capacity reserve. Today, they are not doing it anymore, and definitely this had an impact upon those prices being a bit lower. As far as other factors than the reserves, in 2016-2017, the operational capacity intervention capacity reserve will be launched. Am I able to say what will be its impact upon the future prices? I can't really say. So I don't see any major macroeconomic. There's simply more electricity on the market today. It seems the situation has repeated that without the support mechanism, the prices are not very high, and this is the main dilemma. The main component. Another question about the hedging and the average price for 2016. Average, what price do you expect? This is, but there was also a question about the auction. But the second issue, whether the change in this respect, will it have any impact in the renewables on our plans to sell the wind generation assets? Let me put it this way. All the renewable energy sources or wind farms that are currently in operation will be able to join the auction system. We know that the ordinance draft envisages that the capacity that could join the auctions is quite limited. We'll definitely be analyzing whether to join the auctions. At that time, it might lead to a change of the approach. We don't know as of today what this auction system will be like, what will be the reference price, what will be the expected rates of return of those who will be bidding. But could be beneficial because in case of winning the auction, we have a holy peace. We have a price set, preset for a long time ahead of time. In case of not joining the auction, working under the old support mechanism, there's always a risk of a change in prices and certificate prices. What's also very important is the issue what will be the final situation of a draft mentioned by the project mentioned by Mr. Krukowski. If this project is completed, then the way whether we join the auction or not, it will be the decision of us and partners together. I can't tell you today what would be the partners' position in such case. What seems to be common sense is the fact that the partner would join the auction would only in case the expected rate of return on the price acquired would be higher than the one he had guaranteed under the project term. We haven't had such talks yet, so it's a bit premature to speculate on that. Also, the issue of hedging was also mentioned. Electricity prices, does it lead the current prices? Does it lead to the situation where the company thinks about changing the hedging policy? I don't want to speak about that because that would mean that I would show my underbelly to everyone who's observing. We are doing it quite dynamically and looking at our generation. Last year we had a bit different strategy in generation. This year we had a different strategy. So if I were to say now what will be my position on the year 2016, that would be just madness. It's too early to say, and we cannot disclose this type of information. Thank you very much for the ability to ask more questions. I have a question about this debt, coming back to all that, the ability that you can exceed a net debt to EBITDA ratio of 3. Does this include the wind farms spin-off project? No, it doesn't. So without selling wind farms, you will exceed. As of today, Mr. Piotr, you're suggesting me the answer, but no, I don't want to suggest anything. I said that what is applicable to the net debt to EBITDA ratio, the project that we're working on is not covered by the forecast. If there was a risk of exceeding the net debt to EBITDA ratio, then this project would improve our situation. But let's take into account the fact that this is not the reduction of the ratio by 1, by 0.5, maybe 0.2, 0.3. So this is not a project that would mean that I would have to be concerned about the net to EBITDA ratio. How much debt end of next year will be off balance sheet in various JVs that are not consolidated? That's my second question. And what is the opinion of banks about it? And what will be your approach to the dividend? What will be the approach of the banks to the payout of a dividend by TAURON in the context of exceeding the covenants and the off-balance sheet debt? Talking about the off-balance sheet debt, I would have to indicate this project that we do off-balance sheet. Apart from this project that we mentioned, there is no other project that is off-balance sheet. Wola, Łagisza. Wola, yes. Łagisza, no. Łagisza is going to be on balance sheet, whereas what is characteristic for Łagisza is a capital provided by the partner will not be consolidated. So Łagisza is definitely on the balance sheet. Wola is a different situation, different case. So it means that PIR, Polish Investment for Development, will give money as such a quasi-debt, debt as equity, and so mezzanine something, yes, something like that. But I think you talked also about the dividend policy. We have not changed our dividend policy yet. Probably the discussion on the recommendation will come back once we face the situation where the net debt to EBITDA ratio will be exceeded. As of today, we haven't changed the dividend policy yet. As of today, so that's all. One more question about the wind farm transaction. Did you offer PPA? And on some conditions that would be close to the current market, but closer to the substitution fees. I cannot tell you that at what level we offered PPA. This is not a public information, but I mentioned that. That's true. The transaction was based on the PPA and CPA. Otherwise, we would not be able to close the deal. Okay, thank you. Mr. Kubiszewski. One more question. You mentioned that the decline of mining output extraction output was due to factors beyond the control of the management board. I understand that there's low carbon content or some kind of outages or so, something like that. Was it true? And Q2 also it may happen the mining output would be so low. Some of the reasons that I mentioned I consider to be subjective according to the current management board, former management board. I mentioned 3 reasons. Let me start from the back. Increased content of contamination pollutants in the coal phases, so it's a beyond our control factor. The second reason, slower progress in the coal phase extraction due to the geological difficulties. That's also beyond the control. The first reason is being analyzed as today, to what extent the company, the subsidiary, contributed to the situation. I mean here delays in arming the coal phases, because these are organizational issues, and frankly speaking, looking at the earnings of Q1, whether the causes were beyond our management board's control or within their control. To what extent this will have an impact in Q2, I think, versus the original budget that we adopted, the Q2 will not be at the budgeted output level. So the situation will continue to have an impact, some impact upon Q2, where the subsidiary sees catching up is the second half of this year. We have a question from Mr. Tomasz Stępień from August Media. 2 questions. What is the current status of talks, if such talks are conducted at all, on TAURON's share in the restructuring of Kompania Węglowa? The second issue was the generation unit's participation in the operational capacity reserve this year. And what was the revenue in Q1 versus last year, and when TAURON was the main beneficiary of the program? Talking about first new Kompania Węglowa, I understand. Well, let me answer that there are no talks underway And TAURON is not interested and not involved in the process of entering the new Kompania Węglowa entity. That's the briefest answer I could give. Second question, I think already mentioned that we, in Q1 last year, 77 million, now we have 20 million from the operational capacity reserve mechanism. So definitely, we will not have such a big share as we had last year. It's simply impossible. Mr. Kuzawiński now? Good afternoon. I have a question about the old Kompania Węglowa. Could you comment, we maybe give some more details how our work is progressing related to the Brzeszcze coal mine? When can we expect a decision, or maybe order of magnitude of your potential involvement in terms of investment related to the purchase of this coal mine and providing equity investment into the coal mine into subsequent years? Could you give us some order of magnitude? To start with, let me tell you that you remember that we were saying that the precondition for necessary precondition for TAURON to look in more detail at the assets was the transfer of those assets to the restructuring mining company for those assets to be restructured, and it did take place on May 4th. So quite recently, we are at the end of coming to an agreement on the content of a letter of intent and the NDA, and if those documents are signed, then you will be forthwith informed of that, and this will open for us the possibility to examine in detail the coal mine itself. Until that point, we didn't have such direct opportunity, but this doesn't mean that our advisors in the technical part and in the, let's say, macroeconomic part were working already on this issue. Let me just tell you that if this deal goes through, then it will be done definitely on market terms at arm's length, which should be also confirmed by the potential financial investor that we are looking for. And of course, it'll be the transaction to start with will be off balance sheet. So through a specially set special purpose vehicle, it will not be a transaction directly related to our value chain to start with. As far as numbers are concerned, I cannot give you any data because we just have estimates, but only after a detailed due diligence we'll be able to come up with detailed numbers. One thing is already known, that some operations could be liquidated permanently in order to enable the operation of the other parts. That's good. That's a good piece of information. Just to give you a brief answer, coming to the question of Mr. Klukowski, I looked at the data in the meantime about the trading. The 5 tera was the sales of our generation, production 3.3, so they traded about 1.7 terawatt hours. Look briefly, so 60 million based on this volume, that would give you about 35 PLN margin per megawatt hour. One more question. Is there any date that the government agreed with the miners from Brzeszcze, with Kompania Węglowa, by what time the investor is to be selected in the agreement that was concluded? They speak about September 1st. But by that time, if the restructuring coal mines company doesn't find an investor, then Brzeszcze is to be returned to Kompania Węglowa. That's the provision in the agreement. Thank you. Thank you very much. I'd like to invite you to ask questions after the meeting, traditionally also to stay in daily touch with our Investor Relations Office. Thank you very much for accepting our invitation. I'd like to invite you to the next meeting in August. Thank you very much. Thank you. Thank you very much.